Hi guys, this is Nikki, you also known as Faces Trader, and you are watching the Awesome 10X Live. It's August 10, 2020, and it's already Monday. We're going to discuss the global market updates. Let's start with a few names. We are seeing that in this last, okay, so we are seeing a lot of strength in a lot of consumer staples. Although I never discussed consumer staples, as a group, we have been seeing Nissin Foods, Kikoman soy sauce. Some traditional firms have been doing well on their earnings front. You could see Kikoman actually was up 15% last week. That was an earnings related play. Now, for the US, you might not be checking on Japanese names, but it's useful to say that there's a lot of Japanese companies that's also doing well. SoftBank, of course, was something that we have been discussing that we like, but so does a number of video game related publishers in Japan. Now, a few things to note. I'd like to share something about Facebook. So, of course, you are aware that WeChat was banned in China. And then TikTok was also banned, China and US. So you could see Trump bans Tencent. Today's the second day that Tencent is dropping. It's 511. We see a strong support here at 480 and even a stronger support here at 440. So we are waiting in the next couple of days whether indeed Tencent will really drop such that we will get an entry for some great companies. It should be noted that last Friday, a lot of your Chinese-related apps were falling down in relation to Trump banning WeChat. So YY, of course, is the owner of Likey, Bigo Live, a lot of Chinese-related apps, YY Live. And so that drop allowed, that Trump announcement made some people scared about their Chinese-related holdings, such that this is a huge bearish signal for your Joy Inc. Nonetheless, we do think that the earnings call this week might actually prove that the drop is an opportunity instead of being scared. Take note that there is a strong buying support here at 67. Should Joy Inc. fall tonight at 68 or 67, a 10% drop here might actually be a very strong downside move, such that the downside is limited and the upside is bigger than the downside if you can enter near 67, 68 tonight. Or not tonight, but a few days from now. So definitely the China-related tension has reflected negatively to all of your Chinese names. Take note what happened. Kings of Cloud gap down from about 38. So basically what's happened here is that people, the double top here at 40, double top here. So any rallies at 36 above is going to be considered a lot of selling pressure, with a lot of buying pressure instead here at about 30 below. So around 31, 30, or 29, 27, you've got a lot of supports here. So this becomes a trading range. Buy, sell, buy, sell, buy, sell. Those kind of names for Kings of Cloud. So you could see that Chinese names in general are getting a lot of selling pressure. Let's take a look at what's happening with the Chinese names. Alibaba drops big, 264 to 252. There are two ways to play China-US tension. What you should know is that there are resistances. Every time Trump tweets something, people are getting scared, or they have the impetus to take profits. So there are people who probably have $200 support and or even lower prices, and this scare of Trump with TikTok and WeChat is making some people scared of what's the repercussion, given Alibaba owns a lot of Chinese companies. So any potential ban could affect their revenues, and so this drop is just a scare noise. It's a bit of a noisy thing, but that is still a price action to the downside. We are seeing a lot of Chinese related companies that we like being sold down because of this. So take note, a lot of Chinese names. JD goes down, Alibaba goes down, Pinduoduo goes down. So you've got a lot of selling pressure. So we are seeing that people who have a huge position, a huge win in some of these Chinese names might actually consider a sell-off to the downside because of that. Now this week, last week, we've seen a lot of wreckage happening, mostly because of that TikTok ban. We've seen Fastly moving down heavily. Fastly goes down 110 down to about 80. We do note that if this rises, you continue to have a lot of selling pressure at 90. So with a 10% upside and potentially a bigger downside, we'd still be careful in advising people that it's better to avoid. And then if you have Fastly, you want to actually sell near 90. If you haven't sold at 90, maybe try to make sure that rallies on the upside you sell, because this big drop is partly two things. Partly, you've got a 30 to 40 times price to sales. No matter how much you love the company, people with Fastly, with shares at about $30 or even as high as 50, can dump on you anytime. So people have prices as low as 30 or even less than that, especially the bright people who got in at about 20. You could see that this drop is a technical sell signal, and any rallies here would be continuously sold. So you've seen that Fastly went down, Datadog went down, Alteryx went down. See, gap downs, Datadog goes down, Alteryx goes down, bang. So these are actually, even if this rallies, you have a potential bearish trend here. This is a very, very huge sell signal. Selling signals like this is an impetus to actually be careful and be cautious. Does that mean that Alteryx will go down to 80? Will it go down to 100? It really depends on the fundamentalist, no? But as a chartist, I'll tell you what, these are Miley Cyrus wrecking ball stocks. I would be away from all of these. I am actually happy that I don't have Livongo. If I do have Livongo, that is a sell to me. To me, 150 to 120, even after a 30, 20% drop, I would say that the bulls can say anything, but this is a technical sell signal. Livongo is a sell. Your Alteryx is a sell. Your Fastly and Datadog are sells. Um, what else? Your T-Doc is also a sell. A lot of people will be angry at me if I say that this is a sell, because these are companies that everybody loves. But I'm trying to tell you that you have to also follow the chart sometimes. These charts are selling signals. Of course, I said Chinese companies are being sold right now. So if you own them, you should be aware that they could be trimmed or they could continue to be sold. Are there companies that I like? Yes, there are. Solar firms that we like actually broke out last week. So we said that Canadian Solar was a great buy. Take note, after earnings, this went up 10%, hitting as high as 26. I'd say that any drop of Canadian Solar back at 24 will be continuously bought. You might want to check out the earnings for Canadian Solar. Can it go 30, 35 to 50? Those are things that is probable. Take note that our Sun Power picks, okay, going well. Broke that 1130 mark. That is a breakout after great numbers. So you could see that our love for solars have really translated to love us back. Especially our Sunrun pick, right? So we bought Sunrun near 25, 26, 28. Now it's 46. Some of us might have sold at 40. Nonetheless, any drops at 36, 37, I think is a higher ledge move. Sure, this could have been such a huge extension already, no? I'm not saying that this will continue further, but I'm happy to say that any drops of these names would continually to be bought. And face strong moves right after earnings. It isn't. We aren't sure that it doesn't go down to 64, but I can tell you that Enphase, Solar Edge are doing well on their fundamental front, and so any dips here near 190 to 200 for Sedge and Enphase are better buys rather than trying to nitpick wreckage Miley Cyrus stocks. Okay. So there, do we have something to share for you? Yes, I do have something to share for you. Facebook, of course, we do like it. We gave a no-brainer stock pick last Friday. That was July 31. So July 31, I made the pick on making money while sleeping. And I did discuss Facebook there. I also discussed some Nintendo. Let me read to you why I like some no-brainer picks. You could actually go to our Twitter. I shared, this is my Twitter account. Let me read to you the reasons why I like some no-brainers. No-brainer, easy stock picks. I will read it to you. Okay. Wait up. It's here. Okay, so in case you missed it, Nikki's no-brainer stock picks for easy money. You can watch a 1-hour show, August 7, 2020. It's taped and recorded. We mentioned that we like Disney, Apple, Sony, Nintendo, Microsoft, Spotify, PayPal, and Facebook. Now, of course, before this show happened, we have been buying some of them already, or we already own them, meaning we are holding them. And on any dips, we will continue to buy. Let me share to all the viewers that if you bought Nintendo stock on the first time that they announced the Nintendo Switch, that was 2016, you would have bought at 16,000 yen and you have tripled your money because it's now 50,000 yen. 4 years after, but we do believe that the momentum for Nintendo continues to be strong, such that at 50,000 yen or even at 45 or 42,000 yen, any dips here, we would likely buy Nintendo. These are continuously gonna grow to 100,000 or 200,000 yen. Let me discuss very briefly to you for just 1 minute or less my elevator pitch for Nintendo. Okay, this is my Nintendo elevator pitch for all of you. Nintendo makes a lot of money through the razor and blades model. It's kind of similar to how Apple makes money. Apple sells an iPhone and then inside sells apps, makes money to the distribution of apps, software, and all those Apple TV Plus, Apple Pay, Apple, all of those nice things that Apple makes money from is called the software service revenues. Definitely, Nintendo does the same. Nintendo can earn from the Nintendo Switch hardware, but they do more by selling you games inside, which is a software. So Nintendo can sell a lot. Mario Kart Deluxe, 27 million pieces. Animal Crossing, 22.4 million pieces. Video games aren't just toys. They are actually entertainment. In fact, video game is the largest competition for your streaming TVs. Nintendo, Sony, Microsoft, Facebook Gaming, NVIDIA GeForce, Steam Engine, all of these great Epic Games, all of these great companies, Valve, all of these are your competition for your Netflix and Disney streaming. Games. Legend of Zelda, Breath of the Wild, 18.6 million pieces. Super Smash Bros. Ultimate, 20 million pieces sold. So Pokemon Sword, 18 million pieces sold. Let me share to you just how magnanimous Pokemon Let's Go Pikachu, PEV, Super Mario Party, Super Mario Odyssey. Video game sales are just a preview of the digital software sales, which are growing well. So take a look. Nintendo Switch, 61 million units. This has grown to sell 406 million units and growing. How big is 400 million units? Just to give you an example, there are 4.5 billion smartphone devices. So can software like can hardware Nintendo Switch 60 million grow to 100 to 200 million units? My guess is yes, given that Sony PlayStation was able to sell 450 million units in its lifetime. That goes to say to you that I am bullish not just on Nintendo, but also on Sony PlayStation, PS5. I want you to actually watch the state of play, the state of play of Sony, which they released a day ago, last week. Watch it. Now, people always underestimate giants. Let me tell you how profitable Nintendo is. In the last 5 years, 2016 to 2020, how many companies would have tripled their growth of sales and 10x their company profits? Take a look. Operating profits, $32 million, $352 million. Ordinary profit from 28 million to 360 million. That represents a 12x increase in 5 years. And the stock price is just up 300%. From 2016 to 2020. So I would say that amongst profitable Nintendo companies is one of the biggest profits. Quarterly results show you how amazing those are. 500% in the last 3 months, 150 million yuan. So that would be $150 million. So I think that at $50 billion market cap, Nintendo is one of the companies poised to make 100 to 200 billion in the next 5 years. So we would see in the next 3 to 5 years whether I'm right. But I would say that any drops of Nintendo is a godsend. Okay, that's it for you and for me. I would love you to I'd like to welcome all of you to our channel. If this is your first time, please subscribe to Awesome 10X. We do try to give you a lot. What is the best platform to check charts of US, Europe, Asia, Oceania? The answer there is Interactive Brokers. We have even Polish picks. Polish games. You can make a lot of money in Polish games. I will reveal to you a Polish game that everyone knows. Gas-gas na to. CD Projekt, of course, is one of the best companies in Poland. And this is a 100x name. Any drops of this company would be bought at 360 or 400. These are godsends if they will drop. And even if you got them at 200, I don't think that you should sell at 400. So these are just continuously uptrend companies. CD Projekt is one of those Polish names that I do like, and I would say that there are more Polish game developers that I think are 10x, 100x names. I will not reveal those names to you for free. You guys have to enter our Awesome 10x subscription to know that. How do I buy my picks? Quarterly, weekly, gap down. I do buy my picks daily, or sometimes if there is a disclosure, I don't buy it on gap downs. Usually I buy it on a gap up. So I do buy gap ups. I do buy great earnings if I think that the company will continue to grow higher. So just because I'm up 100% doesn't mean that I would sell it. In fact, if I think that the company should be bought more, I would buy more. If I could buy it near the gap, I will. So an example for you of a gap up that I bought more of is, did you know that I bought a gap up of StoneCo, STNE? So StoneCo, I have this payment play. So here, we bought it before earnings here at 25, and then at 32, that is a gap up, still buy. 45, which is a breakout all-time high, still buy, continuously holding. That is just an example of a gap up that I'm willing to buy. Another example of gap ups that I bought is Pintuotuo before. This one at $20, I've already gotten it. 2019, this was a gap up at 30. That was still a buy. Sure, sometimes you get gap downs like this, but usually I do have a gap up. I do buy gap ups. Example of gap ups, I think that I should watch Editas. This one is a gap up. Take note, I don't mind. Okay, so 32. So I've been trying to buy Editas. So I have it already at 30. There was a merger play. So at 40, it went. I didn't buy it. Of course, I didn't buy at 40. I bought some at 37 with the hopes of buying near 30, actually. So I'm willing to buy at 33, 34. Editas looks to be a buy for me, a gap up breakout for me. I'm more of a gap up buyer, and I would buy earnings disclosures that are better than expected. I like buying all-time highs. I like buying breakouts. Example of a breakout is CSIQ. I did say that Canadian Solar, I think it's a buy. Take note that is a gap up. This is I did already have 22 and 24. I might buy more at 25 or 24. This is a gap up play for me. I do think that Canadian Solar will go 30, 35. I can't answer all the questions because I'm giving so much for free. There. So www.awesome10x.com. You can subscribe. Should I transfer all my funds? I don't know. And I don't believe in 2 or 3 stocks. I'd show to you that at 20 to 30 companies, we are making 50, 100%. You don't need 2 to 3 stocks to make money from. We will show you how to make money owning 20 stocks, owning more than 8 stocks. I do believe in owning 15 to 20 names. I will give you sector plays. So I like some e-commerce plays. Of course, C Limited was a company that we've made money from. And although it has resistance at about 140, I think that C Limited dropping at 100 is a godsend if it falls. Earnings will come out this week for C Limited. I do think that there's so many companies that you can buy. And I do have a lot of bias buying and holding. I choose companies that I would buy and hold. How do you sell if things go wrong? Basis on news or chart. So right now, example, I'll give you a sell recommendation. China tension is a sell recommendation for me. Although I believe that the companies I like are gonna do well, they are profitable, I am aware that Tencent could drop. I am aware that YY can drop. I am aware that a lot of my Chinese picks like Pintuotuo, JD, Alibaba would fall. So the nice thing about these names is I've got them before they were running up. So that's like a 300% gain just becomes 250% gain. Doesn't matter to me. Will they fall forever? No, I don't think so. So I think like for some people, they would actually use this opportunity of the US-China tension to actually buy Tencent, Alibaba and Pinduoduo and JD if they fall significantly. So like I would sell a bit and then I'll buy them back if I could. Sometimes if I sell them and they don't fall down, it also happens. So like sometimes they just fall 10% and then the next day they go up already because fundamentally they are secular future winners talaga eh. I mean, in the next decade, I don't really see a company, example na lang, when Facebook had a bad news on the boycott, we wanted to buy Facebook actually at $200 and 180. I've been posting there, but it doesn't go down. So sometimes I just ask myself, what's the secular trend? If I'm gonna make 200% here in the next 5 years, I don't mind getting a 20% crash. So yun, that's really how I evaluate it. I take a look at whether, like example, C Limited. I know that it can drop 20%, but if I think that in Southeast Asia, everyone knows that Shopee has already beaten Lazada, online shopping is the future. I don't mind I don't mind if it drops like technically 140, I know there's a seller, but at 100, I also know there's a buyer. So that's really how I analyze. Um, I do diversify. I really do. So I add on my winners. Some of you know that I've made money on Sunrun. And because Sunrun is a solar play, I even made money on HPH, which is a Philippine solar play. I even made money on Sun Power, Canadian Solar, Enphase. In fact, I don't want to reveal a few more because I have so many solar plays that I will make money from as well. So when you understand that the sector is strong, it doesn't mean that only Nintendo is doing well. Nintendo is what I told you, and I sure can make money in Nintendo, but it also tells you that I can make in a huge, huge play in the video game sector. The problem with the local companies is that I can only choose 5 names or 4 names. There's very few. Unlike in the global market, I can own 20, 30, 40, 50 companies, and really, these are leaders globally. There's just so much 100 to 200 to 1,000% moves globally. And I'll be honest here. If I am to choose only one, I'd go global. No brainer, guys. It's easy to make money in global markets. I can sleep well at night as well. Profitability wise, the effort I do, like if I only have time to study, I make 300% more in US rather than spending the same time here in the Philippines. But that doesn't mean that I can't make money in the Philippines. It's just that it's easier to make money abroad. When do we evaluate our stocks? Weekly, quarterly? With winners, I really just let it run. I don't really mind. I let my winners run. I'd only evaluate if a news really hampers a stock pick I have. So there's only one news that is wrecking my portfolio, and that's the US-China tension. I have some Chinese picks. They are secular trend winners, but this US-China tension is creating a short-term noise in some of my Chinese picks. It makes me evaluate, should I trim my Chinese names even if I like them long-term? I like a lot of Chinese names long-term because they're very profitable. But I'm not like too arrogant to say that Trump is not useful as a gauge for me to sell or trim just a little out of my China positions. That's all. Some people will actually be contrarian. They would buy these Chinese issues because they know that Trump is just noise. That's also true. I've been doing that. Like last year, I've been I've been buying Alibaba, JD, Pinduoduo during the Hong Kong protests because I argued, what's the Hong Kong protest gonna change? It's not gonna change the fact that Chinese will still buy from Alibaba, JD, and Pinduoduo. And that was a recognition that the freedom of choice is limited to just 3 companies. And there's no point in trying to negate these 3 companies. E-commerce giants will continue to do well. And they've done like 200, 300% higher, except for Alibaba. Alibaba 160 to 250. Didn't move as much as JD and Pinduoduo. There's too many people asking me about Lemonade. I think Lemonade is a cult. It is 300% up. I think that I could make more money in other IPOs. Doesn't mean that I think that Lemonade is not good. But I do think that I might have a better risk-reward ratio in easier companies. So example, I'm not too daring. The reality is, if I think I can make easy 10, 20% or 100% in Disney, in Nintendo, I don't mind if some people can make 500% in, say, Lemonade. Sometimes I don't really care because at the end of the day, my money is my money, your money is your money. I try to choose companies that are not always the highest reward, as long as I can predict that I could make a lot of money in them. For instance, like in Facebook, I know that it's a no-brainer buy. And some people would say, well, is that your best pick? Well, I know I have some 100, 500% returns in a company that I like, but I think that diversifying to some big companies that are so predictable and some disruptors. So Lemonade is a disruptor. So it really depends. I have disruptors in my portfolio. It's just not Lemonade. I won't tell the disruptors in my portfolio though. I do have some disruptors. So I do like a lot of sectors. I'm a person who is very assorted. I love solar. I love wearables. I love payments. I love e-commerce, online education. Within the video game space, I love a lot. Like I could talk about US publishers, Chinese, Korean, Polish, Japanese. So there is one sector that I am very much concentrated. Solar's games. A little bit of games, yeah. I think video games is a huge secular trend. Really depends how you want to play it. You could play it through Facebook Gaming, Nvidia GeForce, or so many other small companies that will go 10x, 50x, 100x, right? So there's a lot of Polish games that you might want to check out. In the Philippines, I have very few. Because in the Philippines, I have very few ideas. Philippines, I have less than 5. Global, I have so much. Global, I have 25 to 30 companies. Because global, I can pinpoint so many winners. Global, I'd rather actually exit some of my Philippines to go US. Because the time and effort I make, what's common? What's common, tell us? My common stocks? My common lang. Sony, Microsoft, Nintendo, those are the winners. Facebook, those are the winners. Okay, I have revealed so much, guys. Thank you very much. Yes, Trump has killed my Chinese bets too, sadly. I don't know what's gonna happen with my Chinese bet too. Okay, bye-bye.